In times of crisis, you've heard this probably, where people will say, gee, you know, I looked at my portfolio, of course, a mistake probably, and I've lost X. The human emotions around money are, you've lost even when something's only declined. Of course, you've only lost if you sold something at a loss. The main one is lack of adequate financial planning, which is not just a behavioral finance concept. It's rooted in some long-held biases by humans that a lot of investors, individual investors, feel like they're incapable of doing their planning. They need help, and then they don't seek it, and then they try to do it themselves, or worse, they try to follow whatever the hottest topic is, and then they get their portfolios are all out of whack. That's a main issue. That's one big chunk of bad behavior. People tend to put off decisions, and then when they decide to take control of, say, investing, they often herd in at the wrong time. So, for example, you saw after 2008's crisis, individual investors fled the market, and by and large really didn't pile back into the market as a group until December of 19. There were some in 18, but mostly in 19. There's these huge charts when you saw that a massive amount of money flowed in, missing the whole 7 or 8 years of a bull market, and of course getting clobbered in February and March this year. People tend to be risk averse, and it hurts their long-term financial planning. So, for example, if you look over a long period of time, again, that's what we're trying to get people focused on, is the long picture. We show these slides to investors, and actually to advisors and investors. If you look at the S&P over a long period of time, it's a gentle slope upward of risk. And sure, it has those bumps in it, but even 2008 doesn't look bad when you look at the long-term picture. Then take a look at, right next to it, we'll put the February-March activity, and it looks really stark on a short-term basis, and very scary. But because of availability bias, that's what people pull into their heads, that chart with it goes down violently over a short period of time. And if you looked at it from a longer perspective, you would be fine. You would control those emotions, and your portfolio would be fine over time.
Invest in you. Ready, set, grow. CNBC and Acorns.